Now, what I'm going to talk about today may seem to be common knowledge to a lot of people out there, but for some of you, this is not known information, and this is really critical. It's extremely relevant. It's very important information. We are literally talking about the difference, oftentimes in tens of thousands of dollars, depending on the potential price of your home. 10,000, 20,000, 30, 35, maybe $40,000 is not off the table in terms of a difference in what you're going to get back in return for your home, depending on what time of the year that you list the house. Again, this may be very much common sense to some people. They may say, I already know this. But for those that don't, I'm going to show you some data. Again, here, really big on the data, really big on the analytics. This is our safe zone. This is our safety net. This is our safe space where we know that we can make educated decisions in terms of real estate decisions, dealing with our local housing markets whenever we rely on the data. And so that's exactly what we're going to do to demonstrate this point that could be the difference in making some of you out there extra thousands of dollars in your pocket, even this year in 2025. Now, to demonstrate this, we're going to look at my primary market, which is here in Florence, South Carolina. And there's a couple things I'm going to show you to demonstrate this idea, but let's start with median list price. All right, so the dots are where we are currently. So as of the time of this recording, it's actually February the 17th, but this data updates every Friday on a 7-day scale, a 7-day rotation, and therefore the last update for this data was February the 14th, Valentine's Day 2025. So if you see this time a year ago, we were coming into March, and March 8th, that week, was the turning point to where the median list prices began to shoot up, peaking in 2024, basically, what is that, about $50,000, $40,000 higher than where they were at the lower point at the beginning of March. And this graph is running on a 90-day average. So the 7-day average is this dotted line, and you can see the spike there, significant spike. Translates to the 90-day graph there. But to make it clean, we'll just take that one off. Same thing in 2023. The end of February, coming into March, prices began to go up. Median list price for homes went up. February 2022, for those that are tracking, that was not the case. Prices didn't go up till a little bit later in June, but this was an anomaly. Interest rates started to climb. And so there were some variables going on in 2022 that kind of made it an anomaly. And that can be proven by just looking at the 5-year picture. That's the 1 year out of the 5 that are on this graph where the trend was different. In 2021, same thing. It actually started a little bit earlier at the end of January, but moving into March, prices were going up, or at least a median list price, that is. And again, right in here, we're still dealing with the pandemic situation. And then the same thing in 2020, right there around March or April is when the median list price began to climb in Florence. And there's a couple of reasons for this that are really very logical. But like I said, a lot of you may have never thought of them. So let's just look at a little bit more data. So with average days on market, it's the exact opposite. So you'd say, okay, well, the median list price went up. So, prices of homes are higher coming into the spring, but can the value of a home really increase? I mean, are those homes not just sitting there forever and then they have to reduce the price for somebody buys them anyways? The answer is no. So if you look in February, right around this time, this almost a year ago to the day, was whenever we really saw the average days on market last year decrease and go from a high of 93 days on average, on a 90-day average, 93 days average days on market across all market segments in Florence, to by the time that we got to mid-July, which is where the turn is at, but we'll get into that in a moment, down almost 20 days on average at 76 days, average days on market. Same thing in 2023. We get into the spring, this time a little bit later, but in May, there's the drop-off. Same thing in 2022. In May, average days on market, there's the drop-off. 2021, same thing. Right there in May, there's the drop-off to the average days on market. And 2020 was a bit of an anomaly. People couldn't get out of their house. So you have to kind of take that with a grain of salt. You have to factor that in. So evaluate it how you may. But as you can see, each year for the previous 4 years, the average days on market has dropped. So what can we expect? Right now, we're at 103 days on market average for Florence. A little bit higher than where we were a year ago. But what can we expect? About 8 weeks from now, this number is going to either be stabilized or peak, and then we can expect that it's going to start to drop while median list price is going up. So the question would be, are people having to reduce the price? So they list the home at, say, $500,000 But, just back in November, the house would have maybe listed for $450,000 or $475,000, whatever the case may be, the specifics of the house. Did they have to reduce the price anyways to get it off the market, to get it sold? The answer is that the data shows no. Same thing, you come to February, properties that have to decrease their price began to decrease. Now that number did go up, and this is right whenever we saw the mortgage rate increase right in this time period. So you have to keep that in mind. But the market starts to kind of adjust and stabilize out and get used to the new norm or whatever the norms may be. So the next year, more in line with what we would expect to see right after Valentine's Day, or, right before Valentine's Day, really it peaked. And there was this massive drop in properties that had to decrease the price. Remember, we like to see this number down at 30% is really where we would like to see it hold. And so we got down close to that in 2023. Same thing in 2024. Right there a little bit earlier, right before Christmas in 2024, but especially as we move through Valentine's Day and then moving into the spring, the properties with a price decrease drops. As you see, they're down close to 30% around that mid-July turn. And now here we are this year, and we expect to see the same trend. The data shows us. So we put that expectation there with good faith based on the patterns, based on the history, based on the data, based on the analytics. 2024 was pretty stable. But again, remember, there's been some variables in this 5-year snapshot. First, we had the pandemic, then we had mortgage rates. But even in the midst of all of those variables, like I said a moment ago, you can still see these trends. You can still spot them. So imagine in just a normal, stable economy, market, housing market, and environment, how much more so you can kind of have an expectation to a degree of what to expect and then kind of go from there. So I want to keep this short and sweet. What I just want to tell you is this video is just about timing. When is the timing to sell your home? If you're looking to sell in 2025, based on what we just looked at, then you're coming into that time period now. The peak time for market exposure is you would go from, say, March to the end of October for our area. But you also have to keep in mind that the peak is going to be mid-July. So July 4th is the peak of our local real estate market and many real estate markets all over the United States. So the stuff we're talking about today is going to really apply to a lot of you in general. If you get in March, at the beginning of March, say maybe mid-March, maybe even the end of March, depending on just certain variables, and we talk about these things in our weekly housing market updates here for our area, the ones that I do. Your local realtor should be able to walk you through some of these things. Also, it may make more sense to come in a little bit earlier, depending on how the market's performing. And beat some of the competition to the market in terms of other homes that are going to sell that are comparable to yours. Sometimes it's going to make more sense to wait a little bit closer to the end of March, but usually somewhere there in March is when you're going to want to have that home listed and on the open market. If you come in at the beginning of March, you have March, April, May, June. You've got 4 good months that basically, if you've priced the home right, you should not even need to consider a price reduction. You should be able to, if you priced it correctly, you should be able to get as much traffic and as many showings as you're going to probably see and try to land that best possible deal, the highest yield and return that you possibly can for that particular year. If you haven't sold by July 4th, that's whenever you're probably going to need to, if you came in March, you're going to need to start considering adjusting your pricing strategy, maybe just adjusting your marketing strategy in general. But hopefully, ideally, you've gotten it at least under contract by that point. And so in my opinion, if you come in at the beginning of March, then you've got 4 full good months where things are going to pick up. Now, what's the reason for this? It's not just the weather. That's part of it. More people are out and about, but it's actually school's out. So not everybody has children, and not everybody is a school teacher by trade, but you're talking about a large portion of the buyer's market, the buyer pool, are going to be impacted in some way by school being in session and not. And so a lot of people choose to move during the summer. Are we coming to the late spring? You've got spring break there. That's an opportunity for people to get out and travel, especially if they're moving out of state or out of town. They can get out and go view homes. Because remember, there's a good chance that the buyer of your home, especially if you're in Florence right now, and I can tell you this firsthand, I've got buyers I'm working with from multiple states. Literally right now, buyers from 4 different states in particular that I'm working with at the moment that are looking to buy immediately. Not to mention a few that are kind of waiting a little bit later into the year. that number would be closer to 7, I think, buyers out of state if I factored them in. But anyways, the point that I'm getting at is that these people can't just come. It's not like a local person who can go look at houses every weekend. A lot of times they've got one shot, and they're going to come in town from, say, Pennsylvania, and they're going to need to see all the homes they can see that particular weekend, or it may be 3 or 4 months before they can come back. And if they need to buy or they're ready to buy, then this is their shot. Just kind of understanding that aspect too. You've got spring break and then you've got the summer, and for a lot of people, this is their ideal time to search. Now, some savvy home buyers out there, maybe they're not going to be too picky. Maybe they're confident that they'll be able to find a home that they'll be satisfied with. They understand we're going to wait until November. We're going to wait until the holidays, the first of the year, January, February, and we're going to conduct our home search then and try to get an offer in on the home at that time, because we're going to save money, which is true. Statistically speaking, as we just looked at, they're going to be able to get a home potentially for a little bit less at that time period. Not necessarily because home prices goes down, because if you notice, we didn't look at price per square foot, but because sellability, because the buyer's pool is so limited, decreases at that time. Remember, the key is in the price reductions. During the holidays, during that portion of the year from, say, a home that was listed in October, coming through November, December, January, February, the price reductions goes up. So it's not necessarily that the list price that they would have came in at would necessarily be less than what it would have been if they'd have listed it in, say, April. The price per square foot is generally about the same. They may come in a little bit lower, understanding the time of year that they're in, and it's just a little bit tougher sell at that time of year. But it is a tougher sell a lot of times at that time of year. And so a lot of times you see a price reduction. That's why the data shows that properties with a price decrease is higher in the holiday season. So savvy buyers will watch homes and say, if we can catch them around Christmas, we might save $25,000, $30,000. And that happens based on some certain specifics with your home, what segment of the market it's in. If there's some comparable homes in your neighborhood that you can leverage the price point that they're at to make your home more appealing, there could be variables that maybe you come in a little bit earlier, maybe you come in a little bit later. But generally speaking, the 1st of March is going to be that time frame. So if you're looking to sell anywhere in the country, get with your real estate agent. If you don't have a realtor, I'm connected to a network of realtors all over the United States. So I can get you in contact with a vetted and qualified real estate agent in your market. If you would like some help with that, I'd be happy to do that for you. But certainly if you're in the Florence, Myrtle Beach area in South Carolina, I can definitely help you out. So if you'd like to receive a complimentary home valuation, let's take a look at the specifics on your home, see exactly what that timing is going to look like for your home in relation to what we've talked about today, and then find out exactly what value you can expect to realistically get a return from on your home. My contact information is down in the description of this video. Reach out to me today. It's February the 17th at the time of this recording. So time is of the essence with these things, and I'd be happy to sit down and have a conversation with you. Let's look at a marketing strategy. Let's get a home valuation on the home and figure out exactly what your home would be worth in 2025 and what is the exact date that would be the ideal target to have it on the open market. So with that being said, this is really very straightforward stuff. A lot of you that may watch this video say, man, everybody knows this, but everybody doesn't know. We take for granted what everybody knows. And so if you need to sell your home or a sale is upcoming, it's going to be a need that you're going to have, then hopefully you find this information helpful. And if you stuck around this long, I'm assuming that you did. So as always, I appreciate y'all's viewership. If you found the video helpful, please give it a like. It's a simple gesture in return for the information for you that actually helps this channel out a lot so that we can keep doing what we do here. And again, I appreciate y'all's viewership, and God willing, we'll see you on an upcoming video.